What is up, everybody? It's the Stable Ad coming at you. It's with another weekly update on what's happening in the world of stable coins. So first this week, I'm just going to start a little bit with just some of the cool, interesting news that I thought would be interesting to share. Then we'll kind of move on and talk about. I want to talk a little bit about just some things that are happening in the space and some of the progress that was made in 2025, and then we'll finish with just a couple of the places where I'm just from a large overview level, sort of thinking about where I'm kind of placing my portfolio and what I'm sort of doing and just how I'm sort of thinking about portfolio placement. If you do want the deep dives, if you want all the allocations, if you want every move that I actually make, that is over on Substack for paid members over there, and that's a way that you can support this channel and growth. So if that's of interest to you, make sure you go check it out in Substack, and the description will be below in the notes. But let's get into the video here. So just another interesting week here in the world of stablecoins. Russia's ruble-pegged stablecoin helped evade sanctions to a tune of $100 billion. Things are getting interesting in stablecoins, right? I mean, this is something that world governments are not going to be happy with. So not all things are good in stablecoins, and I'm not saying this is good or bad, but I can tell you, we all know for certain that countries that put on sanctions on Russia are not happy about this. And in fact, this A7, A5 has grown a lot. It actually the usage of this came down quite a bit. So it seems like law enforcement has figured out how to enact their stablecoins. And if you remember, I think it was just last week or the week before, Tether came out with an announcement saying we reserve the right to blacklist any wallet that we want. And it seems like Tether, even though they don't sit in the United States, has received enough pressure to probably start doing that over here, working with the creators of this A7, A5 to do that, because the transactions have stopped. But it's just important to note that it's not all good in stablecoins. There's some interesting stuff being done in that space there. On the positive side, let's go over here. Let's do this one first. Coinbase is allowing users to borrow up to $1 million against their staked ETH without selling it. So this is something that we've talked about on this channel. JP Morgan, Bank of America, all these big banks have talked about doing this exact same thing. Coinbase is sort of the first big exchange, big publicly traded company to do that in the United States. And I expect to see more of this as the major banks start to do this. It's another sort of way that the industry itself is just becoming a lot more mature. And I think that this is a sort of thing that quietly creates the next major bull run for crypto. So we've had nothing but pretty much all good news in crypto in 2025, but price has not done anything good unless you held Solana and maybe Bitcoin, although in 2025 we could argue that the whole year was a sort of sideways market. But for stablecoin investors like ourselves, I always talk about this. In bear markets or sideways markets, I try to make between 8 and 10% on my stablecoins. And in bullish markets, I want to make 20% on my stablecoins, because I'm going to get airdrops, I'm going to get protocol rewards, I'm going to get all different kinds of things that aren't available to me in sideways or bearish markets. So while I don't care about bullish or bearish markets in terms of my strategy, I know that I'm just going to make outsized returns in those bullish markets. And so it's just important to kind of think about these things from a high level. And this sort of quiet thing, this idea that nobody is going to want to sell their crypto, is the thing that sort of pushes price up, right? It starts to lift the tide up on all these things. And so Coinbase is the outlier, the first one. Once JP Morgan, once Bank of America starts offering these things, I don't know that this is going to be like, oh my God, we're going to push price into the ether and we'll have the bull market that never ends. I don't really believe in that kind of a thing. But I just do think that this will start to lift the tide, and then price will begin to rebound, and hopefully this is the beginning signal of whether it happens in 2026 or in 2027, I think that we will have stronger markets and stronger returns from stablecoin investments, as well as if you're one of like me and you hold some crypto. Another really bullish thing, PwC announced this week that we basically passed the point of no return, right? So they say here the debate has shifted whether or not institutions should use crypto to how they'll integrate those systems as stablecoins move into production use. Stablecoins, and I've talked about this on my Substack here. Stablecoins are increasingly used for payments, settlement, and rather than trading. And I've talked about this on my Substack. I've written numerous articles about how stablecoins are breaking the world of payments, business-to-business payments, money remittances, payouts, digital payments for consumers. And I just wrote an article yesterday about how there's an entirely kind of new ecosystem that's being built right now, which is we're going to call machine-to-machine payments, M2M payments, which is probably going to be bigger than all of them when artificial intelligent agents start making financial decisions for us and start deploying capital into sort of microtransactions. So I think that PwC is right here. We're moving beyond the world of gambling, which is the sort of traditional world in crypto, right? Where in 2021 we had a lot of gambling on NFTs. I probably personally spent $250,000 on art back in 2022. And I still love all the art, but man, do I wish I maybe kept some of that cash. And then in 2025, we saw the same type of spending and gambling done in Solana. And we'll talk a little bit more about Solana too, but a lot of that done on the meme side of things. So while that's not going away, I don't think gambling and or speculating in crypto is going away. We're moving into a stronger place where stablecoins and crypto is not just used only for speculation, but for real life things, and that just increases our ability as stablecoin investors to make more money in this space and to have more optionality in this space as real world assets start coming in here, as payment companies start coming in here. We can also start moving away from speculative trading. We can also, as investors, just general investors, own the publicly traded companies. We can own the Coinbases of the world. We can own the Circles of the world. We can look at other players that might take advantage of this, like PayPal, for example, that could be right in the middle of this, and just think about things in a broader perspective and not just be crypto on-chain only, which I think is just really cool and helps us expand our ability to make money in this space as stablecoin investors and investors in general. We did a deep dive on Infinity last week on this channel, and they write this article here about entering the world of Bitcoin-backed CeFi lending, starting with Maple Finance. And I think this is really great. And I also did a talk here on YouTube about Gearbox's article talking about how looping is sort of dying because we've got all these real-world assets and we've got all these different sort of new mechanisms for yield that's coming on to play in crypto, and it's changing the world of crypto. And I think this is just another step in that direction. I wouldn't say it's a step in the right direction. It's just a step in the direction that we're heading here. And so I think this is really cool what Infinity's talking about here. Adding a subset of CeFi lenders and being the sort of what they call the duration play, right? Infinity is the duration engine of DeFi. But what I think this does is I think this actually probably increases the risk a little bit of Infinity, because now you've got duration risk, you've got the potential for regulatory risk, you've got all different types of things here. So I sort of my stable ad grade of Infinity last week was high risk. This sort of cements that position. And so if I were to play around with Infinify, which I think is a good protocol, it would be squarely in high risk for me. I probably wouldn't. My max for a high risk position is 2.5%. I probably wouldn't even go up to a max position in Infinify until I've seen a couple of cycles and seen how they sort of handle market stresses, because I just think the surface risk has been increased here. But again, just another thing to point out with the trend of what's happening institutions are coming. There are new ways for us to make money as stablecoin investors in this space. Not all of them are lower risk. Some of them increase the risk because it removes liquidity, it adds duration, it adds all kinds of things. So it's really interesting to see these things play, but I want to see how they play out over time before I add personally add meaningful dollars to those investments and change my risk sort of grading to them. This is a cool, moving on to Solana here. This is a really interesting little report done by Bird Eye on Solana. The key takeaway is basically, that Solana has grown as a chain, and it really has. It talks about how Solana's grown in DEX volume to pretty much the most DEX volume in all of crypto, right? It talks about total DEX volume Solana surpassing 3 trillion, exceeding BNB by 1.2 times, Ethereum by 3 times, Base by 5x. As we know, most of this, or if you don't know, most of this is meme trading, right? So meme coin trading, memes exploded with pump.fun. So it became really, really easy to create memes on Solana. And the speculators and the gamblers just came to Solana in droves because it's cheap, it was easy to create tokens. And so we had massive decentralized exchange volume growth on Solana. But you've also had, with that, it's not all bad things, right? It's not all good and it's not all bad. With the crazy DEX trading, you had also crazy growth in stablecoin supply. You had to, right? Because people went from their meme coins to their stablecoins, which then also had effect on basically everything. You had real world assets growth there. You had tons of growth there, bridged volume on Wormhole. So people began to bridge over from other chains. So it wasn't just net new people. It was also existing crypto people that moved over to Solana. So Solana is here to stay. And I think we can see that over here when we look, right? This is sort of DeFi and TVL on Solana here on DeFi Llama. Ethereum is still far and ahead of what Solana is, but Solana has grown tremendously over in 2025. And while we still have Ethereum is the king, with EVMs also behind it and adding to the king there in those positions, Solana is here to stay. It's shown that it's here to stay. It's shown that it survived its worst bear market. And so I think Solana has stapled itself in not just speculation but I think it's become a real player here in just about in every meaningful way. So I think that as a stablecoin investor, we have to start looking at Solana a lot more as a place to deploy our capital. We can see here that, and this doesn't show everything, this DeFi Llama here, I've just put it over here to show some of the TVL and the stablecoin DeFi over here on Solana here. We can see there's not a ton in a lot of these positions, and there's not a ton of APY in this. I think this is off here. We can show what's really going on over here. We'll go over here to Camino to see what's really happening over here on Camino in their lend here. Let's just take a look quick here. So yeah, it's paying 7.52%, not the 0.69% here. This Centaura PYUSD. We've got real stuff earning over here on Camino. We've also got real stuff earning over here on Jupiter, right? We've got this Jupe USD earning 6.16%, USDC at 4.43%. So we've got real stuff going over here. These are not small, tiny things. It's not more or less impressive than what's happening on EVM, right, on Ethereum mainnet and on L2s, but I think it's meaningful enough to note that this is a growing ecosystem and something it's too hard to ignore now. I think as stablecoin investors, we're going to have to start putting some more capital, or at least attention, over on Solana, because it is a growing ecosystem, which means there's going to be a lot of opportunity on this chain as the markets move to something hopefully more bullish in the future. And I just wanted to sort of point that out, that Solana has cemented itself, I think, in the ecosystem, and it's a place that is going to have a lot more optionality in the future. It's still young. It's still a lot more risk to me, and that's why I haven't deployed a ton of capital over there. But I have started to play a lot more. I had some money on Camino. I've started to play on Jupiter a little bit because some of these things are interesting to me, and just sort of worth pointing out. Just to kind of talk about where we are in the market. Peter Brandt over here, who, for those of you who don't know who Peter Brandt is, he's a trader who has been trading successfully for, 50 years or something like that, 40 years. He started doing, he's one of the kind of OGs that trades charts, and has been studying charts for however long he's been in this space. It's really hard to do that over a long period of time, making the kind of money that he makes. So he's not always right. He's wrong 50% of the time. And he talks about it here, right? 58K to 62K is where he thinks Bitcoin is going. If it does not go there, I will not be ashamed. So I do not need to see your troll screenshots. In the future, I'm wrong 50% of the time. It does not bother me to be wrong. And Peter Brandt's right here, right? Like as a successful trader, his whole entire strategy is to be right 52% of the time, 53, 54% of the time. Be right just enough times more than he's wrong. And he's wrong plenty of times. So, but it's just important to kind of point out that somebody who's been in this space, that looks at these things in a non-emotional way, has been calling for sort of bearish market. And there's plenty of people that are. There's also plenty of people that are still buying and think that we're going to have a nice first and second quarter of the year. And so, again, as a stablecoin investor, none of this really matters as long as we've diversified our portfolio, right? Which I think that I do a decent job of doing that. My portfolio has been created with a structure behind it that is meant to withstand bull and bear markets. It's diversified across low risk, medium risk, and high risk protocols and stablecoins in a meaningful way. Again, I talk about that in great detail over on Substack. So if you want the detail of how I do that, for paid members, they see all my allocations. They see how I put everything into risk buckets, exactly how I do all that kind of stuff to make sure that I withstand bull and bear markets. So if you're interested, that's over on Substack. But the point being here, I'm not doing too many moves in my portfolio right now. I'm kind of staying a little bit more still than I might normally do. Just waiting to see how things play out. I'm pretty comfortable with my low risk portion of my portfolio. In fact, I might add a little bit more low risk, which is again why I make a little bit less in bearish markets and sideways markets, trying to kind of meet that 8 to 10% mark, which is still really, really good. And I may not get to 8%, right? I may be at 6 or 7%. I'm okay with that. My goal is to try to get to that 8 to 10% mark and then be totally outsize that in bullish markets where I'm making way more than that. But it's just sort of important to note where the market might be headed and just sort of think about that from a risk perspective. If the market's bullish, I'm going to spread out and do a lot more fun stuff with my higher risk portion of my bucket. I'm going to try to make, 20%, 30% in those types of buckets, even though there's more risk to those types of things. So again, just sort of shows how my head's thinking about this type of thing. And that leads me to kind of my next sort of bucket. I love Aave. It's the most simplest form for me to make, it's what I consider to be the lowest risk form of deploying my capital in crypto right now. And you can see here on Ethereum mainnet, this has been sort of the best part of my portfolio for the last month or two, was making the decision to move cash back over to mainnet because of the protocol, the blockchain upgrades they've made has lowered their gas fees, making it a lot more tenable to deploy capital in smaller dollar amounts over on Ethereum mainnet. And I really like everything going on over here. You got MUSD, the Midas USD over here. MetaMask USD making 5.08%. And some of these may be capped. I'm not looking into this. I'm just showing you broadly here, right? PayPal, 6.64%. I think this might be capped. So you might not be able to deploy capital in here at this point. But again, just showing you what's available on a low risk, simple lending protocol like Aave. 6.4%. You get a 5x boost for USDE. This is a global dollar, a low risk stablecoin, which I have some in my portfolio. Probably even deploy more and buy more USDG here. 6.45%. Ripple RLUSD, 6.32%. Even just slightly, this is I don't know how easy this is to buy, but this is a treasury asset, treasury-backed asset, 4.13, USDS just under 4%. So, I mean, you could have an entire portfolio of just low-risk positions, I think, and you don't even have to do anything. You could put $10,000 in here, buy a few different tokens and then just deploy them all on Aave, and you're making 5-6%. Like, no big deal, right? Here, you even have in their Horizon real-world assets positions here, you've got RLUSD over here at 5.89%. So, and USDC real-world asset here making 4.7%, 4.07%. So, just again goes to show you what's available if you wanted to kind of set it and forget it and never worry about it, not even play around with high risk stuff. Aave's got some really great things going on as well. Right now, Uniswap has some cool positions paying rewards. Compound has some okay positions, but again, like if you're playing the market in a sort of bearish way, and you're really bearish on the market right now, and you just kind of don't want to pay attention, Aave has enough for you to kind of deploy over here. And that's we could also look at the savings account paying 5.46%. That's another position over here paying 5.46%. Easy money. So that's the update this week. Great trends in stablecoins and stablecoin growth. It's like almost nothing but good news week after week. We'll have to pay attention to see what happens with this Clarity Act stuff. I think that there is going to be a compromise met. Right now, the Congress and the government is trying to balance out helping out these small credit unions and these banks, helping them stay competitive, while also wanting DeFi to be built in the United States. So it'll be interesting to see how Clarity kind of evolves over the coming weeks, and to see if we can get some consensus over there and some compromise. But almost nothing but good news in stablecoins. Growth on Ethereum, growth on Solana, growth on these layer 2s, lending coming right now with Coinbase, but no, it's over here. Lending coming with Coinbase, and probably the middle half of this year to the later half of this year, we're going to see that same thing opening up on JP Morgan, on Chase, maybe on Fidelity and other brokerages. We'll see people being able to borrow against their crypto assets. So I see this being really bullish long-term for the space. And whether you're bullish or bearish, moment to moment, again, Peter Brandt is a trader. He's not investing in these assets and holding it for 10 years. He's talking about where the market's where he thinks it's heading in the near term. We always have to zoom back as stablecoin investors, because we're just thinking about things from a macro perspective, and the whole point is being diversified, setting up your strategies before you deploy your capital so that you can withstand bull and bear markets, so you don't really care where the markets are headed, and you can play both bullish and bearish markets as stablecoin investors and make money in any market while reducing your volatility. So hopefully this has been another helpful weekly update for you. Until next week, I'm the Stable Lad. Stay stable, my friends. I'm the Stable Lad, and if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice, so always do your own research and manage your risk wisely.